Belpointe chief strategist David Nelson is with us. So, David, I'm not worried about inflation right now. That's not at the top of my thing right now. I'm not worried about inflation coming in, 24 months later, that kind of thing. But what I am kind of concerned about is the action in the market overall and, the lack of excitement about what's happening with the 10-year.
The market today is not about inflation. This is, and Treasury's going lower. It's not about the economy rolling over. The industrial sector is probably one of the best performing sectors this year. It's the narrative that's underneath the market that a lot of our favorite trades are just simply not working. And the capital is shifting. And broadly speaking, a lot of the market is doing great. It's just at a market cap weighted basis, we don't look so good.
Right. Okay. To your point, we talk about it a lot on the show, equal weight having a hell of a year, small caps having a hell of a year. I want to talk more on the economy before we even get to pivot back to the markets, because we had Craig Fuller on yesterday from Freightways, and he says that from what he sees, we're going to have a manufacturing boom. It's on its way. And I got to tell you, we had some great manufacturing data for the last couple of weeks. And then this morning, Chicago Purchasing Managers number, it's been rising at a rapid rate. This is the highest it's been. In fact, this is the first time it's been at this level since 2020.
This is a great chart. I love this. And it speaks to what's going on in the market. If you look at the industrial sector, if you look at the Russell 1000 and you put up all the charts of the Russell 1000 industrial sector, more than half are breaking to 52-week highs. It looks like tech in 1999. It's extraordinary.
Speaking of tech, let's talk about tech for a moment, right? I'm going to bring up a chart here, really a great chart from the compound. The Mag 7 Premium. This is the Mag 7 Premium versus consumer staples. It's gone. I mean, it's gone. It's evaporated. It's gone. I mean, does that mean the trade is over, or does it mean that we should be licking our chops?
The market is telling a very important story here, and it's a very unique moment in time. There was a reason why the Mag 7 performed so well over the last couple of years, because it was the only game in time. There really was no choice in 2023. But as time has gone on, you're going to see the second derivative of growth. The Mag 7 growth next year is probably going to be around 16%. That's demonstrably lower than where it has been. The other 493, they're accelerating. So that market trades at the margin, and it sees that. And as long as they're spending the kind of capital that they're spending, Amazon is on the border of going free cash flow negative. We saw what happened to Oracle with that. As long as we're spending that much money and there are other choices, the capital's going to move.
All right. When I was in the military, there used to be a saying, if you got them, smoke them. Seems like when I read this, you were saying, if you got profits, take them. Yeah. All right. I mean, but you're pretty tough on folks. You're saying don't use any excuse, right, like capital gains nonsense. What are you saying? Like, is the market so vulnerable people need to be taking a second look at everything, even their winners right now?
Yeah, they do. The market is telling a story, and you should listen to the story. Look, I don't want you to get out of all these names. I own every single one of these names, but I bet every portfolio manager on this show either has none or significantly reduced portions of these same names that they've held for the last number of years, because the capital is moving. And as long as that capital is moving and there are other choices out there that are growing faster than the Mag 7, you got the Microsoft right now on a 3-year basis. On a 3-year basis, Microsoft is actually underperforming the market. Same for Apple. There are choices out there. None of them are outperforming the market year to date. Yet there's a lot of stocks up a lot.
Yeah, well, let's talk about one that's up a lot and you still like, CME. And this, is one of these names that's come into the conversation about AI agents. Can they eat their lunch? You say impossible.
Impossible for this company. And it's probably one of the only stocks in the financial sector up today, and I think it's because of that. You cannot replace a liquidity pool with a large language model. Impossible. All right? Some of the other companies like ICE and NASDAQ, they have a lot of data analytics that could be replaced by AI. So this is my safety valve. Is 26 times earnings too much to pay to sleep at night? I don't think so. I own this one.
You do have a mega cap name on your list too. You like Netflix here, which is making a nice move. I think there's a sigh of relief they didn't overpay for Warner Brothers.
Yeah, and when I pitched this, it wasn't up like this. This was before the news. So what do you do here?
Let me ask you, because it was at like 76, now it's at 95. Would you still buy it here? Or would you wait a little?
You're not going to buy it today. But it's going to back and fill in here. But the business model is not broken, and I applaud management because they did not overpay. They walked away from a deal that would have been bad because the math for the synergy of this deal wouldn't have worked. Every other streaming company, this is the company they want to be like. Why not just buy them? You're getting them at a multiple you haven't seen since 2022.
Good stuff. David,
thank you.
Good seeing you, my man. It's been far too long.